In today's training, we're going to be running through Voyant's Investment Returns Insight. This insight runs an analysis on your plan and lets you know what is the baseline rate of return that this plan needs in order to be successful and not have any projected shortfall in the plan. You can run it from plan start to plan end, or if you'd like, you can change that start event and run it, say, for just the retirement phase. I'm going to run it for the entirety of the plan. And what this analysis is telling us is that this plan needs a minimum rate of return of 4.25% year on year in order for them to continue to have an estimated successful plan and no estimated shortfall. You can compare this to their current scenario by clicking compare to plan, and I think where you'll see the biggest difference between the two versions is in the assets chart. And I'm just going to remove the non-liquid assets since it's not really a factor in the analysis. And you can see with the Insight Result Plan, we're running a 4.25% rate of return. And you can see the difference between their projected asset values in retirement. And then also, if you look at the final year in the plan, you can see the difference between the estimate for how much they would have in that final year between the two. So in this example, this is giving you what is the bare minimum rate of return in order to keep them out of the red. I hope that this has been helpful. If you do have any questions, feel free to reach out to us at support@planwithvoyant.com, or you can click the name of your client, request support, enter your message into the text box, and share client access. Thanks for listening.